TSLL, the two-time leveraged ETF of Tesla, has dropped 58% since December of last year and has been basing for weeks. Is it ready to launch? Hey, I'm Dennis Wilborn. I've been trading these setups for years. It's what I teach in my book, Trade Your Way to Freedom, the blueprint for busy professionals who want a disciplined process instead of guessing. Links in the description. Today, I'm showing you the full setup I'm watching, including my target shooting entry, the profit target, so you don't miss out on a potential strong setup. Stay with me. Let's get into the charts. After the 58% decline, selling has slowed, and we now have an uptrend starting. Higher highs, higher lows. This is where systematic traders find opportunity because selling pressure has been neutralized. Let's take a look at the chart to see what kind of clues are available that lets us set up this trade. First, let's take a look at momentum. What's happening with that? You know, I like to use the TSI 883. And as you can see, the TSI has started to move up, bouncing right off of support. So for the TSI, we've got a green light. What about the price action? Well, the price action, as we pointed out earlier, we put in a higher low compared to this one back here, took out this high here. So I've got a series now of higher highs and higher lows. But the question is, how do I trade it? Before we get into where I'm going to be target shooting my entry, for more stock and ETF analysis, make sure you subscribe for our weekly updates. Let's take a deeper look into TSL. Well, the first thing we want to do before we jump on a TSL's back, we want to take a look at what's going on with Tesla. The reason why is because Tesla is the underlying and provides more pure technical analysis or technical signs than the leverage ETF, because the leverage ETF is banged around a little bit by volatility drag. So as we take a look at Tesla, we see that prices on Friday closed above the 50-day moving average. So that's very positive. How does it translate over to TSLL? Glad you asked. Let's jump back into TSLL. As we see on TSLL, price actions have not closed above the 50-day moving average. So if I was just looking at the chart of TSLL, I'd be going, that's kind of a weak thing. However, in my hip pocket, I know what the non-leveraged stock in this case is doing, so I'm more positive on it. What's my expectation? My expectation is price will pull back somewhere to about that level right there, or maybe back in between the 8 and the 20, which is highlighted where it's going to be by these moving average extensions right there. So somewhere in that range. For my entry trigger, I'll place a target shooting entry somewhere between $12.70 and $13. And of course, with the AutoPilot trading system, we can do that with a stop limit order. But we use a special kind of stop limit order that'll work every time with sink or swim. Next, I want to establish where the heck might go and where do I want to put my stop loss. My stop loss will be in a couple of places. One, I could just drop it down below the low of this candlestick right there. That was from Thursday. If this uptrend is to continue, we should find support right there at the 820. So if I break through that, that means I'm out of it, and so that equates to about an 8% stop loss. Hard stop. This is a trailing stop that I always take a look at, and it's down about 12%. So somewhere in that range right there is where I'll put my stop loss. What about my projections to the upside? Of course, I like to get somewhere between a 2-to-1 or a 3-to-1 reward risk. So how do I determine how far price actions are likely to go? That's where I call on the mighty Fibonacci. If I expect the price action to move from this level to this level back, that gives me a projection up to the upside. So I take the Fibonacci extension, come to here, back up to there, back down to this low, and that gives me some upside targets. I like 3 of them in particular. The 786, the 100% extension, that means basically 100% of that move there. And then up here at the 1272. Somewhere in that range, I should be able to get out with a profit. Does it meet my requirement of a 3-to-1? So I'm risking 8%. So I need to be making somewhere between 16% on part of the trade and then let it go up from there. So let's measure that really quickly. So if I did get in right here, 1266, and I go up to the 172, that puts me at 17%. So I'm in good shape. That's my 2 to 1. If I go on up to the 100, that puts me up 25%. Now I'm starting to push towards the 3 to 1. And if price actions do make it all the way up to the 1272, I'm sitting at approximately 35%, which meets my requirement of a 3 to 1 trade. Now, of course, I like to take my profits off as I go up. That gets risk off the table. If you want to know more about that, of course, hey, you can go check us out over at www.autopilottraders.com. So, as we projected out where prices are likely to go, not a promise it's going to go there, do your own due diligence, but we've built a trade now that has protection to the downside, plus some nice targets to the upside that are based on the Fibonacci. What are the good things about this potential trade? We've got a clear setup to do it with an area to do our target shooting entry. We've got a solid base building. TSI has given us the big green light and is starting to move back up. So we've got a defined entry. So we've got a defined target. Stop trading by feel and start trading a system. I'll see you in the next debrief, and watch the recent video on TQQQ. It'll show up there and gives you a really good breakdown of where TQQ could be going in the future.